Hello, good morning, good afternoon. Just turn my light on. Welcome to the online future session with myself, Giles Cochran. Very good to see you, Brett, Carolyn. Happy Najam, Odair. Warm welcome to you all. Here we are for another week. Hey, Carolyn. Just going to give folks 30 seconds or so to sign on in. Good morning, Odair. Good afternoon, I should say, here in the UK. Hey, Brett. Hey, folks. Let's get going. Now, the big news that the markets are moving from is from the commentary we had from Jerome Powell at the Jackson Hole Symposium on Friday. Essentially, to sort of condense it all down, what Powell has done is he's explained to markets that the Fed's twin mandate, which is maximum employment and stable prices, they've switched from being most concerned about stable prices, e.g. inflation, to becoming most concerned about weak employment. They've then explicitly stated, Powell has, that a shift in policy may be appropriate with this changing risk. So the risk is no longer primarily from inflation, but the risk now is primarily from a weak US labor market. That's why we've seen this pricing change. Before the Fed meeting, the chance of a 25 basis point Fed cut was seen as about 69%. The chance is now seen as 85% chance of a Fed rate cut in the September meeting. So that means that the markets are much more convinced about the September rate cut after Powell's commentary. That's allowed the dollar to weaken significantly. That's been lifting the majors, lifting gold, lifting silver, lifting stocks. Broadly speaking, right, that is the mood I'd expect to carry on. So let's just take a quick look at majors. Here's that Friday reaction. We were there at the time. Good trading day that we had. Big drop, right, in the dollar. And that dollar weakness should be around. So what we're expecting, upside in Aussie US dollar, upside in New Zealand US dollar, upside in euro dollar, upside in the pound dollar, and expecting downside in the dollar yen. Okay, so that's the broad sort of swing trading perspective. The next two data points that we have from the US that are majorly important is going to be labor print, super important, early September, the Friday the 5th. Advanced notice, I am away that week. So the first week of September, I am away, and I will be away for that NFP print. And then we will be back the following week after, and then September 11th is the CPI print. So they're the next two big data points, which should give us quite a lot of movement in both the dollar, bonds, and stocks. Now, we've also had another little headline that came out, which is Trump has basically commanded a Fed member to quit. Now, remember what Trump wants. He wants interest rate cuts and he wants them now. And he's kind of trying to do everything he can. So he wants to get rid of Trump's from Fed's cook. But she said she's not going to resign. So there's a bit of a battle going on there. That allowed the US 10-year yields just to push higher on that news. A bit of instability, but that since paired off. So at the moment, we sort of saw a little bit of early dollar strength, but I think the weakness should still be around. It's not to say we can't get a pullback in some of this dollar weakness, but broadly speaking, dollar weakness is what we're expecting. Upside in the euro dollar, downside in dollar yen, upside in equity markets. That's the reasonable expectation. In terms of data for today, we've got the US Atlanta Fed GDP coming in at 330 UK, and we've had the durable goods print, which is, reasonably strong. So there's nothing there to worry markets. And you've got consumer confidence coming up at 3 o'clock. Nothing major there. We've got BOE's man speaking at 5. Just seeing if we've got any other Fed speakers. They're the main ones that I've got. We've had Barkin, who's spoken at 1:30, and just seeing if there's anything there majorly from Barkin. Just having a quick look down there. No, there's not much from Barkin on monetary policy. So where does that leave us? Well, in terms of sort of swing trades, it means I'm still keeping my silver swing trade alive. Gold long still makes sense, and just don't forget we've got this really big sort of symmetrical triangle pattern that's forming here on the daily chart. You can also see it on the weekly chart. So we're consolidating to the sideways. Just watch this for a breakout. At the moment, you favor a breakout to the upside. Looking at the euro dollar, again, favor upside in the euro dollar. And that would make most sense. Downside in the dollar yen. And just taking a look at the dollar yen, look at the weekly chart here. You've got this nice hammer reversal. So that's a very nice hammer reversal bar. We've had a rejection here and here. So any pullbacks to that area would be suitable for shorting. So this would be suitable as a short in the dollar yen, just if you get pullback up to that area here. So if you look at the 50 fib retracement would be the entry. There it is. Yeah, so 149.10. So if you've got a move back up to 149.10, that is suitable for shorting in the dollar yen. Okay, in FX pairs, no problem. Euro dollar, again, expecting that to keep moving higher. I think the best way to look at this is probably a breakout of these highs. And if you just look at the euro dollar on the monthly chart, you can see you've had this Harami inside bar break, test, break. So that is really wanting to keep moving higher, and you can see on balance volume pushing higher. So start to look, I think, at this major trend line here. Got that major one there that was broken on this level. And then if you look on the weekly chart, you can look at that one across the top here for a potential entry just across. Let's get rid of that. Be across this level here. So I'd be keeping an eye on that level. If you break above there, you could break out, pull back, move higher. Otherwise, any deep dips down here, look for buyers in the euro dollar. So that's the broad outlook that we have. Now, as we turn to futures market and we start looking at the ES, just see that in terms of value, we had a move off the value area low earlier in the session. We're moving up to the value area high, and we're just sitting around that point of control at the moment. Now, that's a tricky area, right? Now, the market is opening up in the balance of yesterday. So the market is in balance, and taking a look on the hourly chart, see that Delta has been picking up recently over the last few hours, but is still negative on the overnight session from the Globex Open. On the 15-minute, you can see that we're opening up in balance from yesterday, but crucially, we're opening up inside this sort of near-term range we've had from the European session and heading up into that value area high. So you can see I took some longs and then just took off as I wanted this to sort of move up into that area more quickly. You can see here you got nice buyers trapping sellers on volume. So that strong volume that came in here for European session, trapping sellers against the VWAP, entered on the pullback, looking for a little bit more of a move higher than I got. And the thing to realize is we just got this price capping prices at the moment as we head into the US Open. So what we're looking for here is either something that clearly pushes out of this level. And if you look on the 1 hour chart, you've got the point of control from last week ahead, and you've got this value area high up ahead. So there is a bit of resistance sitting up at that 6460 region. So if we can get above this area, then heading up into that 6460, the second standard deviation, could get a bit of resistance. So just keep an eye on here. Ideally, a false break of that, pull back into that area, and then ultimately going long for the 6440 will probably be most interesting for me. But we'll see how we go at the Open. Just for now, recognizing that we're up in this pullback, sold off, pullback, sold off, pullback, sold off. Let's see what happens here at the Open. We've got near-term buyers who've come in. Delta still negative from the Globex Open, but moving higher. So we'll see how that goes. Taking a look around other markets, sentiment is quite mixed. There's some negative sentiment for the French 40 to do with a vote of no confidence being called in Europe. The Euro Stoxx is lower, DAX is lower, but off the lows of the session. Volatility pushing lower. NASDAQ, Dow, E-mini, all off their lows, and just finding a little bit of dip buying. So keeping an eye on treasuries, because that will give us a sense of how markets are worried about that Cook narrative. But the recent move higher in yields and the sell-off in bonds has tailed off and has just slowed down. So gold upside, silver upside, fine. Euro dollar upside, Aussie US dollar upside, all of that makes sense. And ES upside as well. Just be careful that we're heading up into that value area high now. Okay, so it'll be crucial where we open and looking for a good opportunity. Want to see some sellers trapped, ideally down here by buyers, and moving up to that area. As it stands, we're still opening up underneath Monday's value. So the market is looking to go in balance, but has found a near-term balance at the moment. So we're kind of imbalanced from Monday. The danger is we stay balanced in the near term as we head up into that value area high just there. So we'll have a better sense when we come to the open, and we'll see what's happened to these 15-minute sellers. So we'll be back here for the open. Apart from that, hope everyone's well. But this is the major narrative. Simply that the Fed's more likely to cut now in September than they were before Friday. Markets were expecting Powell to be more hawkish. He's actually turned out to be moving towards an interest rate cut in September, and that has been lifting markets. Moving up into that standard deviation. Delta continue to build, on balance volume up, but this is an area of obvious profit taking reversal, so you've got to be careful here. The sellers coming in against that standard deviation. Maybe push above the high, might go long. If we push above the high and trap sellers against that area, or take a quick long. No, sellers defending that. Some sellers coming in up there now. If I push above the sellers, I'll go long and try for a quick breakout. That's it. So I'm going to quick long because buyers are trying to take it higher, but I'll quickly reverse if we come back through. Point of control is now up at that area. On balance volume picking up. Still trying to move higher. On balance volume still moving higher. Still trying to go there. Buyers trying to trap sellers again. We'll enter a second position if I can. Right, so enter the second position now. Coming back to test the standard deviation, crucial area. We are still above it. And now looking for a breakout here would be important if we get it. So we want to see them come in, the buyers. A bit slow now. Point of control is up at that area. Underneath the point of control here, got a 5-minute break above that area. See the 5-minute buyers have trapped sellers there. So give it a little bit more space. The 5-minute, yeah, it's just collapsing down through that area. So let's just give it a second. The 5-minute buyers trapping sellers there, so it's possible to have a little bounce here. Let's see. The last little defense area here. Holding on the 5, just going to give it a bit of space. Now we've had a pullback, that's held. Now pulling back up to this high. Let's see if we can manage to push up above this 5-minute big sort of resistance level. Nasdaq pushing higher, volatility pushing lower. Quite an important little area here. The price trying to push above that standard deviation again. You can see on the 5-minute, can we just push above those sellers? That would be important. Very low volume, isn't it? More sellers getting trapped at that level. Point of control is now moving up there. It's trying to push higher. We'll see how it responds up at this level. Can we push above that standard deviation? That's the key here. Just holding above it for now. We're coming up to a 15-minute close and we're trying to push higher. We've now pushed above that point of control and pushed above the standard deviation. Let's see, this will be important. It's another test. That may not be only as far as the point of control down. Still holding to the upside. Just. Right, if you look at the 5, we're trying to, okay, that's good. We push above those sellers there, that will open up a way higher. Right, okay, all right. 15-minute close coming up. Right, sellers trapped. So we're getting sellers trapped up here. So it means it is a buy bias is still there. Let's see how the close is, but it's trying to make fresh highs, and it's probably going to be trying to test this 60 region here on the weekly. You see, got that area up there to test. Problem is we are in a tricky area, right? You've got more sellers trapped. So if you go for one more long here, you just see another lot of sellers trapped here on the tick chart. Sellers trapped here by these buyers. Volume is trying to build. Pull back to the point of control. We expect to find dip buyers there. Okay, let's see. Do we get a defense here? That's the question. Back up to that standard deviation. So that's the buyers trapping those sellers and trying to come in here. Quite a bit of volume. Let's just see. That's looking dodgy now. Right, I'm closing that out. That's just a bit too much selling coming in now. Looks like they're getting trapped. Quite a lot of selling volume coming in now. That's 1,400 contracts. So sellers are taking control of that and trying to trap these buyers here. Right. So let's see. Yeah.